Good morning. This is Tom Aspray with the Viper Report. Day after Christmas. This lovely picture is a Swiss town called Schaffhausen, where I happened to go through on my way to a speaking engagement in Frankfurt many years ago. And if you've never seen Europe during the Christmas time, it is spectacular, as this picture pretty well demonstrates. And I hope to go back one of these days in the not too distant future. So on to the markets. Pretty good close on Friday. It was a lot better than certainly most expected, myself included. You can see the SPY formed a doji here, which is moderately encouraging. See the 20-week EMA is at 390.92, so a daily close back above that level in this holiday shortened week would be a good sign. Also, it's encouraging that the S&P 500 AD line on a weekly basis moved back above its moving average. So, that's, potentially, of course, we got to get above this resistance here to turn this positive and suggest that the overall market correction is over. So that's going to take some work. Most of the daily AD lines show this sort of bullish zigzag pattern, so it's positive that we have, it closed it above that last high. But this is, obviously, you get a day of heavy selling, it could reverse back and look pretty weak. However, a day of strong buying could push it back above its moving average, and then, we challenge this other resistance level. So we've come down. This support I've been watching here in the 367 to 370 area, has certainly held, wide-ranging day on Thursday. And so Friday's, stabilization, if you will, was a good sign. QQQ continues to look weaker. You can see the AD line here is well below its declining moving average. So, and it's just tested this weekly support level. Didn't close below it, so that's a good sign. But it's got a lot of work. The 20-week EMA for the Qs is at 285.47, and then the downtrend is around 296.32. The daily chart here also looks weaker. Testing this daily support here. This little swing high from last Wednesday had a high of 274.78. So on the upside, that'd be the number I'd watching. AD line, trying to stabilize down here, but it also needs work. There was some stabilization pretty much seen in all the market averages. The NYSE here, shows that it's trying to hold its 20-week moving average at 15,013. AD line, is about keeping pace with prices. So clearly, it needs to move above that its moving average. And then if you see a downtrend here, like this right in here, then that would be a good sign. This is a weekly chart. Let's switch to the daily. Yeah. Also, trying to bottom here. Yeah. But, by midday or early afternoon on Tuesday, once the market's open, we probably have an idea. And if things are rough overseas, given China's increased COVID problems, that could, a sharply lower opening could really, crash this formation here. Most encouraging is the action in the DIA, which tracks the Dow Jones Industrials. You can kind of see that we came right back to the former downtrend. Okay, this was resistance, now becomes support, and held at the 20-day at 320.21. AD line, is trying to turn up from its moving average here, and look at the relative performance. I mean, it's still a market leader, so it suggests those, big Dow stocks, are a good place to look. Those of you who use stock charts, you can go to stock charts and you can see a predefined group. You have all the Dow stocks here. So it's a real nice way. You can see Apple's negative but really oversold. Of course, the oil stocks, we issued that buy recommendation in oil stock and XOP last week. We had a Thursday, a really wide-ranging day, but it's looking much better here in terms of the energy stocks. A lot of them, Caterpillar looks good. It was on the weekly buy list. Other ones, look at the slope of the moving averages. And of course, if you let's see, Merck, a couple of drug companies looking pretty good. Tech, Intel looks pretty sick. Um, no real signs of a bottom in Microsoft, though it could be bottoming. Visa is one that's looking a little interesting. It's kind of come back into that S1 support here. Daily studies are mixed. So this is a good way to look at a snapshot and say, hey, what should I be looking at here? For trading opportunities. We talked about last week or so this, potential bottoming formation in the MACD histogram for yields. So, yields had a pretty nice decline. Real clear top formation here at the start of November. And I started to see signs here. We had this divergence, line D in the MACD histogram. It's now turned positive, as have the MACD and signal line. So, and yields have bumped up here. So I guess what would catch most people surprised if yields rose and stocks rose too. And you shouldn't discount that. If you see the bond market weakening and yields moving higher, it doesn't mean stocks have to necessarily go with them. So you can see the 20-day EMA here is at 3.634% yield, so that's kind of support. And of course, this downtrend here, is currently just under 3.9. The chart of the 2-year note yield looks less positive, but also appears to be bottoming in here. This is the spread between the 10 and the 20-day moving average, so it's narrowed. So a move in yields above this high here, which was at 4.445, would be the first sign. And then you look at this peak here, that was 4.548. Those would be some levels to watch. A week or so ago, it looked like the VIX was going to try to bottom out here, but it's sort of deteriorated here. And so it does allow for another rally. It's it's one of those things that everyone looked to the VIX over the past 3 or 4 years. You remember all those people that wouldn't, look for a bottom, in June and July because the VIX had never made it to 40. So the market couldn't be bottoming. One indicator, one market, and it's been sort of dead money. Everyone has used the VIX to hedge their portfolio, has gotten burned. So, but it's still interesting to watch. We'll come back at some point and be, something that will correlate with where the market's going. On the sentiment front, you can see we talked about last week, I think, and going in this spike in the put call ratio. It's probably, hopefully those guys didn't stay in the puts too long. It's crashed, went from 1.5, so that means 50% more puts were bought, down to even, pretty much 101. Not many signals from this lower one here. That is the index. This is the total put call ratio. Were some heavy signs of selling in pretty much in the month of December. The 90% down days here in the Qs, and a couple in the S&P 500. So, not many, 90% up days at this point. The NYSE oscillator we talk about a lot. It didn't get all that. It got down to about almost 1,000 here. But it's starting to look a little more positive, so it looks like it's going to head back up to that plus 800 to plus 1060 range. If it turns in the first couple of days, Tuesday's close probably includes Tuesday's AD numbers. This, I believe, is updated during the day, so you'll be able to see. So, the lowest risk buy levels are when it gets down here into the minus 14 to minus 1800 range. I look at our ETF grid. We'll definitely have an article out on this. I'm not making much progress on it, but it's really, really fascinating stuff. So those of you who haven't seen this, so this is the list of all the ETFs that I sent out. The quarterly ETF report will be having new quarterly pivots next week. And, list the symbol, the 4-hour analysis in terms of price, red, negative, the AI, that's the RS analysis on a daily basis. It's negative. Weekly price action is negative, and the weekly AIQ is positive. So not a lot of all positive down here. So we go down here to like EMLC. Let's take a look at it. EMLC is local currency bond. yields about over 5%, I think. So it's benefiting from the weaker dollar here, and you can see it's had a pretty good run. It went from about 22 up to 24, so it had almost a 10% run since the October lows. Some of the other ones that Hong Kong, EWH, I believe, was also all green here. It's, you can see how well the Stark band, it had like 4 days up. It had this nice trying to bottom out here. It looks like it's ready to run. Both the RS and the volume here are positive for EWH. IBB is one of the biotech ETFs we follow, and we're in this one. We added a bit last week. This is the daily chart, so it's really interesting to look at so the daily here is negative, not too great a close here. So key support back around here in the in the 130 area, and but then if you look at the weekly, you get a much different picture. You get this sort of bottoming action. So the new weekly pivots could be right here around 128.72. Both the volume and the RS are bullish on a weekly basis. So this could be, just a 3-week pullback after this nice rally. So we really need to get above, these highs around 138.35 or so to turn this chart bullish. Move the grid down to see some of the things that aren't doing too well. You can see all the ARC ETFs looking pretty bad. FTN, Internet, just the Euro overseas, retail, iBuy, not looking too great. IWF, that's the growth, Russell 1000 growth, it's all negative. We can also short this by the symbol, and then you can see all the Vanguard, and the the sector ETFs. So XLE, positive 4-hour daily, but not the weekly yet, and that's also the case with XOP, which we're in. So contrary to the XME, where the hourly and the daily are negative, but the daily relative performance and the weekly are positive. So it's nice to see how this evolves during the market day, and that's what I usually do, and you can track it. So really powerful too. Another great creation from Jerry. I'll close with a look at the S&P futures here. So they're trying to edge higher here. We got the reverse to short back and got a couple of the targets here. The low was 37.95, so we got that second target at 38.06 on the short side, and 37.55 is the remaining downside target, base 260. And the stop here right now is is pretty much just about 20 points above break even. So if you've taken off these profits, the early action once we start trading tonight will be interesting. The daily chart is still negative from back here. We're trying to rebound here, so we're testing, once again, this 40.52 level, it's a key level of resistance. And then if it gets above that, it's going to probably break that linear regression. Volume here is negative. Stochastic confirmer is positive on a daily, but negative on the weekly. And that's pretty much all I have for today. Thank you very much for tuning in. As always, email your feedback. Like your coverage of this, or why didn't you cover that? Tom at Viper Report. Thank you very much. I know there's a lot of pessimism out there about the stock market, but in my 30-40 years of experience, it's usually those times when everyone wants to avoid stocks that it's the time to create some opportunities. We've been talking and writing about relative performance analysis on Viper Report. You can see us find the next bull market leaders. That approach was really helpful in the bull market that started in 2009. So we have a bunch of ETFs we've been talking about, and if you want specific advice on when to get in and when to get out, go to the Viper Report, the Viper ETF or the Viper Hot Stocks, and we still have that special on. If you would like to have learn more about technical analysis, then email me at Tom at Viper Report, and we can have a one-on-one training session. Hope you have a great New Year's, and looking forward to a prosperous 2023.